Eastern Standard Time using the data available at that time.
Let's go to Keith in Philadelphia. Hey, Keith, what's going on?
Hey, Tom. How you doing?
I'm doing great, man. You having a good day out there?
Yes, sir. Yes, sir. So, a couple things, Tom. Number one, I started listening to you in 2001 and never stopped. Yep, and I owe you a lot, my family as well, and this is the first time I'm calling.
I appreciate that, man. Thank you so much.
And now, here's Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 2 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone had a great day, safe day. And, of course, as everyone's traveling out here, folks, please make it a safe one, because bottom line is that we all want to be around tomorrow morning. And, we normally, of course, read a for agreement. Bottom line, folks, yesterday's gone. Tomorrow's not here. What are you doing right now? Well, we all got to remember we're all thankful for a lot of different things. And you know what? Keep that in front of you, and you're going to be in great shape. Market-wise, let's take a look at it out here. We had the Dow Industrials down 236. NASDAQ was off 61. S&P's off 23. Gold contract down 860, trading at $1,693 an ounce. Silver off $1.24 at $31.70 an ounce. Platinum down 20 bucks at $1,549 an ounce. Copper down 7.5 pennies at $3.25 a pound. Late sweet crude down $1.76 at 96.24. Bonds up 1 point and 4 ticks at 147. King dollar on the move, up 87 at 79.30. Euro is toast at 133, and the S&P and the yen is up 34, trading out at 77.32. Our phone number is 877-927-6648. Let's call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at this. Is what you have. We are at 1161. Now, the high of October 4th, folks, is at 1125. The low is 1074. That's what we're going for, and I suspect we're going for the lows. As I walk you through this, I'll explain why. We're already into the bar of the first low that was established, which was on August 9th. That in itself is dangerous, folks, okay? That number was 1172. So we're already in there. So you're only dealing with one bar, and you're dealing with a low, and that low didn't have that much volume. That was the test of the October 4th. That was the test of the 9th of August. That's where it got rejected. Bottom line, we're going down into those levels. We go to the Dow Industrials. Dow comes down 236 today. They nailed it right at the close, brought it down another 50 bucks. That's typical, by the way, folks, of high volatility. Bring them in, and there's still no fear in this marketplace, which is just amazing. But anyway, bottom line, this is a razor blade in the way down. We're at 11,257. That baby's making its way down to 10,825. Now, NASDAQ Composite. What we have with the composite, she's at 2460. 2460. What we have here is that she's also into the low, or she's into the bar of August 9th. Where she wants to run to is, this is like nothing. This is only another 60 bucks down, which was the high of October 4th, which is 2406. The low is 2298. Now, let's go over to the culprit. There's a lot of culprits, but the biggest culprit out here, we know what it is, right? King dollar. King dollar, monster move today. What King dollar does, up 87 ticks, 30,000 contracts. King dollar's making a move for 80.43. Now, that 80.43, folks, I suspect is only the first move. She wants to run to 89. Bonds. Let's go to the bond market. What do we do with bonds? We get looking at the 30-year. 30-year did 435,000 contracts, folks. Monster move. Up a point. We're going after the high that was at 147. At the 147, I believe we had 535,000 contracts. So you can see what's going on. Yeah, actually, this is interesting. We had actually 450 15,000 contracts. The prior day we had 545. What you're doing is this. You're coming into a swing point, accelerated volume. This baby wants to do an ABC structure on the way up. And folks, let me tell you, if this breaks the B with volume, you're going to see things that you will just blow your mind. Because as Oda says in the den, he gave us the heads up over a couple of years ago, actually. But bottom line is that if we go to where I think we're going on the 30, it puts the 10-year at 1.5. That is a number, folks. That is a number extraordinaire. Now, let's go to the euro. We take a look at the euro. What you have with the euro is this, folks. Euro gets smoked today. You know, down big. The euro, we're at 133.33. That is already into the low bar of October 4th. I suspect Friday, you got to remember something. Europe is open tomorrow. They're open Friday. We have a half day on Friday. By Friday, we'll already blown away the 131.46. Now, of course, I speculate out here every day. That's the speculation part of it. The factual part of it, folks, is this, is that our morning, their morning, our night last night, Europe's morning, this is what shook this market today, and it's going to be a lot, there's a lot of problems here. Germany went out and sold a 10-year bond. They were only trying to sell $5.2 billion worth of bonds of 10 years. Now, you got to remember something. Germany is one of the strongest economies in the world, not just in Europe, in the world, flat out. Okay? What ended up happening is that Germany couldn't sell the bonds. They only got a bid of 65%. They were looking for, of course, 100%. The way that works, folks, is this, is that when anyone wants to sell a bond, they say, okay, we will pay this much for a bond, and what they're hoping, you may have heard it before, they say, what's the coverage on the bond? So they put a price out there, and what they hope for is that there is a demand that's 1.5 to 2% over what they're looking for, and then they sell the full bond. Well, bottom line is that it was a failure. They didn't get to sell the full bond, and we're talking short money, $5.2 billion. They only got to sell 65% of it. What ends up happening? Boom. See ya. Don't want to be ya. Markets blow apart. Why do they blow apart? Well, let me tell you something. If Germany can't sell bonds, there's no way that anyone in Europe is going to sell a bond at a low price. Okay? Now, we're going to rewind here for a second. And I'm going to tell you what my take is on this. Germany are going to be able to sell as many bonds as they want, but they're not going to be able to sell them in euros. What you're going to see, more than likely, and this is going to be a shocker, I've been talking about dollar bonds. Last year, flat out, most dollar bonds that got issued since the last 30 years. You'll see, and see what happens is this. If you buy the bond in euros, right, they can pay your interest, but if the euro is going to go from 130 to 100, you blow your brains out. You're done. Bottom line, you're going to see a dollar bonds getting issued in Europe. What does that mean? That means in order to issue dollar bonds, folks, you need dollars, number one, for the bond issuing. You need dollars to pay for the interest, and you need dollars to pay for the actual principal. They'll get their money, but you're going to see a lot more powerful dollar. And the game is on in a big way right here. The writing's on the wall, and that writing that I'm talking about is a factual writing. That is not a speculative writing. When you can't borrow money, when you can't borrow folks, Germany not being able to borrow $5 billion would be like you and I going out to the corner store and asking someone for $5, and they say, no, I can give you $3, and they know that we're a good credit risk. That's how outlandish this whole deal is. So hold on for the ride, because I'm telling you, it's not going to be pretty. Now, what we have is this. We're coming into Thanksgiving, of course, and I hope everyone has a great Thanksgiving, a safe Thanksgiving. European markets are opened. Asia's open tonight. We have a half a day on Friday, and bottom line, Friday, I expect a bad day. The reason being, folks, is that Europe, if we go, let's go look at the FTSE right now. Europe can't save itself. Right now, the FTSE's at 51.39. 5075 is the high of the October 4th level. Now, the FTSE had made its low on the 9th of August. That got down to 47.91. That's going to have until, let's see, so it's going to trade Thursday, it's going to trade Friday, and it's going to trade Monday before we open up. That's the real danger point, and I suspect what we're going to see is that we're going to see a gap down in our markets on Friday and on Monday. If you take a look at the DAX at 54, 57, the DAX wants to run down into this 51 area. We got a question in the den. What about QE3? There's no such thing as QE3. You kidding me? QE3? What do you need QE3 for? What this is all about is that the whole world is charging into the U.S. dollar. If the world charges into the U.S. dollar, everyone in the United States is rich, folks. You know, that what you have here is that this is a situation. This is where this gets, it's just dynamite, and you got to wrap your head around this. Okay. What happens is that without even making a trade, if you hold U.S. dollars, you're going to be able to buy more each and every day. That's what this is about. The market, okay, can't handle it because more than 60% of the earnings of the S&P is outside of the USA, and they particularly can't handle it because they've been making so much money on the currency situation from 2000 to 2011. You know, we went from 121. We went from 121 the dollar index down to 70. The dollar bottomed out, folks, in the year 2008. We're 10% higher than it. You're going to see it go a lot more. If you do happen to be in San Francisco, I'm going to be at the Hard Asset Show coming this Sunday and Monday. I actually kick off the Hard Asset Show at 7 o'clock in the morning. If you can make it out there, come on out and visit us. I'm going to kick off the show, and the speech that I'm going to talk about, I'm going to bring everyone all the way back to 2000, to the present day, in the gold market. I'm going to bring them back in the dollar market. I'm going to bring them back in the Canadian dollar. I'm going to bring them back in the rand dollar. And the reason for that, folks, is this. The currency moves are running the world right now. And what I expect we're going to see is that they're going to be running the world for quite a while. And it's the U.S. dollar. We're out of the downdraft. You're into an updraft. And, you know, you'll hear people will jump on board, but it won't be for about another year and a half until they actually figure it out. And that's fine, too. But by then, the dollar will be at par. The dollar will be at 105. You know, so it's going to be a great, you know, it's not a workshop I'm doing, but it's a 45-minute presentation as to why I think this is happening. And you see, this is where this gets really wild, too, folks, because if the Canadian dollar does go back to 130, then, and if gold can go to 1,500, well, then you're going to see the Canadian miners, Gold Corp making a fortune, and plenty of folks that own Canadian miners can't figure out why they're not at highs. That's the biggest reason. We're going to be right back.